Hi, how are you for sound? Are you okay? All right, good. Welcome, everybody. Welcome, members, to this Audit Governance meeting, 6th of March. And yes, as somebody said, we had a meeting fairly recently. So that was on, what date was that?
30th of January.
30th of January. Thank you very much, Amelia. So yeah, that was the time between meetings is closer because that one was delayed a little bit, but I think we're back on track with the timing. We are webcasting today, so can I please remind members to use their microphones and remember to turn them off when not speaking, and to mute or turn off your mobile phones, please, and anything else that's going to buzz or tinkle in your pocket. And to the agenda. So firstly, are there any apologies? Well, I think we've got apology from David Hancock.
And the leader will be joining us about 3 o'clock.
And the leader is going to join us about 3. So is someone standing in for Julian for any early item, or should we try to just give him time to speak if he needs to at 3 o'clock on the topics that he's covering? Maybe we'll judge it as we go along. Right, item 1, minutes. Minutes of the meeting of the Audit and Governance Committee on 30th of January 2025. Do I have any comments or questions on the minutes from the meeting? Okay, I don't think so. I do think I have some points arising, but what do we do, Amelia? Can we approve the minutes and then just raise these other points briefly after?
Raise the points first and then...
Raise the points first. Okay, so in the minutes, it mentions that we're going to be working closely with DALC to provide training on the Code of Conduct and Standards. I don't know where that's covered in future or who's taking that as an action. Is somebody looking at that? Because I think Councillor Dennis raised that a couple of times, and I just want to make sure we actually put it into practice, because these minutes don't say who's following that up.
I wonder, perhaps we could follow that up with the Deputy Monitoring Officer when we meet with her regarding the Code of Conduct changes.
Oh yeah, that's a very good idea. Okay, perhaps we just minute that. Thank you very much. That's an excellent suggestion. And on that point, there's a note here that some of us are going to review and streamline the process around Code of Conduct, and we do have a follow-up meeting proposed for that on the 13th of March. So I hope people have that in the diary. I think it's at 4 o'clock, and presumably it's online. And and there'll be some proposals from that, proposals on the topic for us to look at in that meeting. Okay, so with that said, then, can I have a proposer for the minutes, please? Yep, and second, all in favour? Looks like it's carried. Thank you. Okay, thanks, members. All right. Urgent business. There are no items of urgent business from my side. And division of the agenda, I'm not aware of any reason to divide the agenda. Declarations of interest. Members, are there any declarations of interest on the topics on the agenda today? No, seems not. All right, thank you. Let's move on then to item 5, proposed internal audit plan. And we don't have Dominic, unfortunately, but Tony, as head of Devon Audit Partnership, Tony Rose has kindly come to step in for Dominic or for Joe. So welcome. Thank you very much, Tony. I don't know if you'd like to just summarise and take us through some of the key points, because we don't have the leader here to take us through this. So perhaps you could just introduce where we are with this, please. Thank you.
Thank you, Chair. Certainly will do. Sorry, a little bit echoey, but so yeah, thank you, and noted apologies from Dominic and Joe not to be able to be here. From my perspective, I think the key points to note, so obviously on page 7, and again I won't do page by page, but the idea of this document as it sits is to look at the work of the internal audit activity throughout 2025-26. There are various reasons for having an internal audit, and obviously in sections like 2.2 you'll note that we need to have a risk-based internal audit plan that ensures compliance and gives assurance. And I don't want to, hopefully everybody's fairly comfortable with the kind of the reasoning, the need for the plans. I think that a point of note, 3.1, last year there was a lot of work put into a kind of forward-looking 4-year plan. To make sure that there was a broad alignment with the areas of coverage, that all those areas that needed to be covered and looked at were noted. The one thing I would say on that the work this year hasn't changed that plan as such, but it looks at that and says, okay, has anything changed context-wise? How do we make sure that 4-year aspect is still as it needs to be? And then this year, this is the expectation. From my own perspective, and I say this to all committees when we're talking these things through, there's a flexibility in this because context changes. So whilst this is where we aim to set out from in day one, it might be by the time we come to the end of the year, there's been conversations with officers in the committee about tweaks around the edges here and there. But fundamentally, the expectations are that the process to get to a plan is robust. There's been conversations with officers. We've looked at the aspects of horizon scanning, as we call them, i.e. what else is out there. To come through to really the important page for you, which is I'm going big page numbers here and scrolling down quickly, which is big page 14 is the start of that. And that page is important in that splits out the effort to be put into the internal audit activity for each particular area of the council, i.e. finance, place and enterprise, etc. So that's an important one for the committee to know. And the next page, which will be page 15, which is essentially the plan on a page. And you'll see there the headlines of the pieces of work that are intended to be undertaken. The slightly bluer columns are, as noted at the top, in essence, service headlines, and you'll see there's quite a lot in the strategy and governance area. The bit at the bottom of that page going across the core assurance, those are the things that we consider to be cross-cutting in many ways. So when we talk about key financial systems, they have an impact on all aspects of the council's work. So they cut across there. Again, grant certification is an important one, and also on the IT side. And there's an element of reporting to the audit committee, etc. So from my perspective, there's been, and again, I've had conversations with both Joe and Dominic in this, a robust process to get to where we are. It's been well informed. And I think that plan that's put forward on page 15 is sound, is what it needs to be, noting the fact that in all cases, things might change and we might need to make some tweaks in future. From that perspective, the remaining appendices, which we include in these reports to make them standalone as such, are there to inform some of the other aspects as to how the plan comes together, why it is what it is, etc. I'll pause there, Chair, if that's okay.
Yeah, thank you very much, Tony. Thanks for stepping in again and giving us an overview. Okay, members, are there any questions or comments or points to discuss from anyone on the proposed plan? Yeah, Councillor Lee.
Yes, I noticed from obviously today's minutes that there's now a part of the strategic risk register put over to the devolution. But I wonder if that's something we need to think about on the internal audit plan. Obviously, it covers lots of different things. It's going to cover internal jobs. It's going to cover everything to do with our communities and everything. So it's quite a broad-ranging subject. I don't know whether we need to include that as well.
If I may. Thank you, Chair. In essence, what I would say is I think if you put it in as a specific headline, that achieves something. What we'd essentially be looking to do is, in every piece of work we undertake, look at the context of the wider English devolution and how that feeds into any piece of work, and then have conversations with relevant officers and others to see if there's something we want to cover. So it will be there inherently, is probably what I'm trying to say, and that's the case across the other DAP partners as well. From my perspective, in all honesty, I think we're probably a bit soon to be saying, let's have a head in, let's do some work on that, because we don't yet know what that means. So it's a case of, that's the flexibility bit. We would have it. It's a bit like one of those aspects, I'll use others like counter fraud and risk management. We feed that through every piece of work, if you like. This is another theme that the audit team will need to be aware of and be having conversations around. So we could put it in as headline, but it's fundamentally in there anyway, if you like, because it needs to be as part of the context of every piece of work.
Yeah, that would be good if that could be recognised in each plan that goes forward. Thank you.
Okay, thank you. Any more? Yeah, Councillor Rake.
Sorry, I perhaps haven't done my homework quite as well as I should have done, for which apologies.
We won't mark you down.
Chair. No, well,
this time.
I think my marks are already so low that I'm unlikely to be able to get them up. But I just wondered, so the on page 15, the individual headings, they get on there because there's a rolling programme and you think, oh, we haven't had a look at travel and subsistence for a while, or because you think there might be issues, or because you think, I mean, I'm just mindful that our colleagues at County, you guys discovered various widely reported problems, issues in sort of some of their HR practices, and I wondered if that was because you hadn't looked at them for 3 years, or if so. I'm just wondering how.
So the starting place, if you like, for development of that page 15 is in many areas and many aspects. So some of that might be our knowledge. So, for example, when we talk about the recent article and the Devon County Council Committee, that will inform some of our future planning, if you like, as you're alluding to. In this case, the fundamental idea of the internal audit plan is to look at the control framework across the authority and make sure that's as it needs to be. Hence the reference to the 4-year plan. So for something like travel and subsistence, we would look at that in a cycle of time, depending on what that might be, because it is an area where there's risk. So in this case, it's not in there because we think there's a concern. It will be either actually from a risk perspective, yes, we think that that's an important place to look at, could be values involved, etc. Or it might well be that from a cycle perspective, we haven't looked at it for a while, so we need to come back and check it's operating in a good way. So it could be for various reasons. In this instance, it's probably more cyclical rather than informed by other things. But when we get to this point next year, if you like, had that not been there, we probably would have been saying that horizon scanning, that risk side of it, this has been a risk elsewhere. We think that it might need to be included. And we have to balance that with the level of work that we can undertake. But it's about when we have an end of year audit opinion, if you like, is that based on the most relevant information it can be and the overall framework of control across the council and our view of that over a period of time.
Just so the routes to page 15, one of them's the cyclical one. So other routes would include sort of learnings from other authorities, and presumably stuff from within SHDC saying, we're worried that the storm clouds might be gathering on this front. Does that pretty much cover it? That's how something would get into this table?
Yes, pretty much, yeah. So we would talk quite closely with Lisa and other officers to say, are there any aspects that we're not aware of that you think there might be something that needs to be looked at?
Thank you, Chair.
Thank you. Councillor Dennis, yes, thought you popped your hand up earlier. Go for it.
Thank you. And this is just in relation to page 15 again, and it's the Salcombe Harbour that features on there. Myself and Councillor Bonham are both on the Salcombe Harbour board, and there was some concern from their perspective that there was a sort of duplication of effort. So we made some comments probably about 6 months ago now, and I just want to make sure that they've been considered and will be factored in when doing that audit. Thank you.
Thank you, Chair. I might just say, I'm not aware of those myself, but certainly yes, and I'll make sure I have conversations with Lisa, with Joe and Dominic to make sure that any fact comments we need to are part of that.
Great.
Yeah, thanks very much. Do you want to add anything to that at all? Or?
Just Chairman, that Mrs. Enstock also is obviously Head of Finance and sits on the Harbour Board, so we will liaise and make sure that we feed back to Dominic any comments around the Salcombe Harbour audit. Thank you.
Yeah, I think we just wanted to make sure there was no duplication of work really unnecessarily. Okay, I do have a couple of comments myself. So on that page 15, I mean, I'm very encouraged that we've got commercial properties and rent and asset management strategy. I think those areas that I personally feel need looking at. I'm a bit surprised that we've got housing maintenance and repairs. I mean, I don't know, maybe somebody else can answer that, because I'm not sure that we've got any more than like 3 houses that are all new, so, or 6 maybe. So why are we auditing houses and repairs? Is it needed? Or maybe it's just a very quick piece of work.
Chairman, yeah, I think we've probably got somewhere between 20 and 30 properties. Yeah, so I suspect that that audit hasn't been done for a while, and that's probably why it's on there. But yes, obviously that will take into account scale of how many houses we have. We don't have a housing revenue account, and we don't have our own housing stock, but that would be tailored to the houses that we do own.
Okay, thank you. And I think lastly, I want to come back to Councillor Nix's point about not so much devolution, but local government reorganisation. I do think the reorganisation is probably one of the things that will affect this council and others more than anything else. And, you know, I'm quite keen that we work out whether we're ready for that or not. And be ready for it, because it's going to totally disrupt it. I know it's also on the risk register, and we might touch on it later on. So I just do want Devon Audit Partnership to be aware of that. I'm not sure it's really something that can be audited yet, but I do think it's important, and I don't know whether any officers have got any comments or whether we should leave it later to look at it under risk. Yes, Anna, Councillor Presswell.
Thank you, Chair. I think it's very important, actually, and I was thinking that when it was first brought up. I don't know if some sort of qualifying couple of lines can be written when you are, you know, you're considering it in the wider picture for whatever you're talking about in the particular audit. But I think it needs to be qualified at various stages throughout when it is being considered, because devolution is around the corner. Thank you.
Yep. Councillor Yardley.
Hi. I'm going to choose a nugget. Parking. 3.3 million, 20 car parks. I don't see it on here. It might be tucked away somewhere, but it's a business. And that business produces a revenue. And I don't see it as being one of the areas that we specifically look at as a business. We might look at it individually within different parts of assets and this, that and the other, but it's a substantial amount of income for this council, and I'm not seeing it front and centre as one of the items that I wish to see a good, solid reassurance audit saying that this is a solid proposition for the next 3 years or 4 years or however long we're meant to sort of look at it for. Thank you.
Do you want me to respond?
Okay, yeah.
Thank you. So each service area would be looked at by internal audit at least once within a 4-year period. And what we have here are the audits for 25-26. We can find out when car parking was last audited. It may have been last year, it may have been the year before. But it isn't as something that will be looked at every year. The only items that are looked at every year are things like key financial systems, like council tax, business rates, benefits, creditors, debtors. Those have to be done every year. The service areas, they will just, so there's a prioritisation. Some will be high, medium or low, and depending on where they fit within that, depends on within the 4-year plan how often they are audited. So we can find out when car parking was last audited, which Tony will probably have, but it isn't something that will be looked at every year. And similarly, with regards to the question about local government reorganisation, what we have here are a list of services which are being audited, services that we provide to the public. So in terms of LGR, I think it would be difficult at the minute because, you know, it's not a service we're providing that in terms of what terms of reference would you look at for that internal audit, really. Thank you.
Yeah, okay, thank you. Tony, any more comments on that? Please.
Brief one, Chair. 2023-24 was the last time we looked at that. Sorry. So we have looked at that more recently, and yeah, I'm happy to go back and find out a little bit more about that, exactly when that was, if needed.
So my follow-up question is, do you look at this as a snapshot, or do you look at it as 3.3 million, 20 car parks, a substantial proportion of the income for the council? One is strategically important, high priority, and one could be broken down into, oh, there's a car park in Dartmouth that looks like it's been looked at okay over 12 months, and another one in Ivybridge, which has been okay if it's looked at as in isolation. But together, there is a strategic issue which I feel that would merit some attention.
Very.
Could I just add on car parking? The executive have given their commitment that there will be a 6-month review of car parking. So there will be a report on car parking within the next 6 months coming to the executive. Thank you.
Yeah, thank you. Tony, anything more to add? Yeah, I think also I take the point, but we also need to bear in mind the scope in terms of reference of internal audit, which is really to look at the processes and the quality of the operation, not whether the strategic plan is, good or bad. That isn't really in their scope as far as I understand. So, were the processes that we lay down as policy followed? Were the accounts properly managed? That's basically what Tony and the team are doing. So, there may be other questions, Councillor Yardy, which, to be fair, I don't think internal audit can answer.
I agree with you. It'd be nice that I agree with you, basically.
But I mean, on the other hand, maybe Tony can share the report from parking with us, because obviously, or point us to the reference where we can find it. That would be helpful, I think. Okay, yeah, Councillor Ray.
Just quickly, Chair, because possibly slightly outside the scope of our work this afternoon, but I mean, is the prospect of local government reorganisation an existential concern for yourselves as Devon Audit Partnership? Because, I mean, it's obviously all your clients are going to shift around and change around, and some of them might say, well, actually, we're big enough now to go it alone, or whatever.
Yes.
I'll give a very brief answer to that. So fundamentally, the question, yes, is it an impact on DAP? Apologies for the Audit Partnership. Yes. What's it going to look like? I don't know, because until we know what we don't know. Do I think that would allow potential entities to go it alone, as you were? That would be a call they would have to make. But the value of partnership working, to me, is not just about the financial side, but you would need. There's certain requirements that have to be met. Those come with a cost, if you like. So I wouldn't expect it to be cheaper, because actually the partnership as it stands is, in my instance, is very good value for money and covers most of the geography of Devon. So to break that up in that sense potentially would make some aspects a bit more expensive. For example, you'll see reference to public sector internal audit standards and global internal audit standards. There has to be an assessment against that every 5 years of the internal audit activity. They can cost up to £20,000. So that cost would be borne by an individual entity, if you like, rather than another one. And then other bits. So yes, but it's lots of unknowns as well.
Thank you.
Okay, thank you.
Excuse me if I went off piece, Chair. But
yes, well, that's okay. Back now. All right. So with that, I don't think there are any more questions. Let's take the recommendation that the proposed internal audit plan, Appendix A, be approved. And I'm happy to go with that. And Councillor Rake seconded. So all those in favour? And any against? Oh, okay. You can. All those in favour. Right. Okay. Thank you very much. We're happy with that. Okay. Thank you very much. Thanks, Tony. Well, back to you again, Tony, with the second next item, not the second item. The item 6, the update on the progress of the plan. We again don't have Council Brazil, but perhaps you can just give us a summary of where we are with the reports that have come in recently. Thank you.
Thank you, Chair. So on this one, if we get into detail, I will be a bit less able to help, so apologies for that one, as I'm not as close to some of the work. But again, the main purpose of the report is to inform the members of the committee around the activity that's been undertaken in respect of internal audit since we commenced the financial year, progress to date, the outcomes from that work, and some of those key items that have come from it. From your own perspective, Section 3 is a good summary of the outputs and outcomes. And you'll see there's a table there. Sorry, I might be on the wrong agenda pack there. I'll give you a big page number, as it were. So that would be big page 24, I think starts to give that summary of information of the work that's been undertaken. As you'll see, when a report went to the committee previously and the assurance provided on that. Notably, you'll see reasonable and substantial flowing right the way through those, which is very positive and should be good assurance for the committee. The work being undertaken at this point in time follows on to page, I believe it's 25, and you can see the progress we've got there on those different pieces of work. And obviously, in respect of those pieces of work that are ongoing, we don't add too much comment because we need to make sure that we've followed our process to finalise those. But the internal audit delivery is on track. There's no risk to being able to provide an end-of-year assurance opinion, and the team are working hard to make sure that we are where we need to be with those. So in summary, from my perspective and having scanned through, there is the detailed report that starts on page 28, but the reality is your executive summary up front gives a good summary of where things are. The following report maybe gives some more individual stats around what started and not, but everything's on track. The assurances are looking good, which is a credit to everybody involved. And yeah, I'll try to answer specific questions, but I might have to defer to Lisa and other officers if possible.
Yeah, thanks again, Tony. And I think, again, it's credit to the teams to have 5 reasonable and 1 substantial assurance reports. And well done to the finance team there for being the substantial assurance area. And yeah, good that we're on track in reviewing and auditing all of this. So are there any questions or points? Councillor Nix.
Yes, obviously I'm really pleased to see that the community engagement got reasonable assurance. However, some of the feedback I've been receiving is that isn't quite the case. Particularly feedback from parish councils, etc., when they've needed to know things, and just in general, the comms and feedback, reasonably poor take-up from surveys, etc., that have gone out. For example, the recent business survey that went out, that was very poorly, in my opinion, fed back on. I wondered how that was going to be addressed going forward. I noticed there are quite a few things, recommendations in the report, though.
Thank you, initially, Chair. Yeah, thank you for those comments. I think to some degree, as we alluded to in the previous conversations, it's about the scope of the things we look at. I do believe, and correct me if I'm wrong, there's a piece of work ongoing at overview and scrutiny around this as well. So it might well be that there's a link to be made there to pick up some of those other queries where maybe a bit more in-depth work can be done. But what I'll do is make a note, if you like, of the feedback we've got, and then I can at least check back to the work we undertook. And I don't know whether anybody wants to add anything.
Thank you. Yes, I mean, I think it was a helpful audit. I think it set out some clear points. I'm talking to Councillor Yardy just earlier today about consultation and engagement, and there is a task and finish that will consider consultation and engagement, as Tony has said. So a really helpful audit, good timing, and all of those factors can feed into it. I think in terms of towns and parish councils, the communications team are reviewing our approach to those communications with town and parishes and having a more structured and planned approach to some of the messaging to town and parishes through bulletins, etc. So, yeah, as I say, all in all, a helpful audit. I don't think there are any significant points raised in the audit. They're really tweaking the sorts of things we're already doing and just perhaps pre-planning some of the work that go into those.
Brilliant, thank you.
Yeah, thanks for the answer on that. Any other comments there? Yeah, Councillor Dennis.
Thank you. I just wondered if Mr. Hawke also felt that the partnerships one was a very helpful audit, because I know it's obviously something I've picked up on in the past, and there seems to be a lot of work identified in the report, which is great, and I'm really pleased to see that we're going to get some sort of update come April. I think from my point of view, I'm still a bit confused in that it seems that a lot is going to go to the senior leadership team, and then it will be highlighted to members. So I'm just wondering if there is any decision body where the members that aren't on the senior leadership team will have any input into that process. Particularly, grants are approved by members for key partnerships up to 31st of March 2025. When do they get approved for this year coming? Thank you.
Thank you, Councillor Dennis. They will be approved. So we've extended the funding for the key partners for a further 12 months. So we're now looking at a thorough review of those key funded partners throughout this year, and we will involve members in that review process. So we don't have the detail of what that process looks like at the moment. We're currently working up a framework for the sort of criteria that we're looking for, which is something we've not really had in the past. So we're working up that framework at the moment, but absolutely there will be member involvement in that decision-making process for those key partners.
Yeah, thank you, Neil. It'd be interesting to know what that means, really. Maybe you could let us know when, let members know once that's been decided. That would be helpful. I think it is an area that I think is sort of a bit borderline in my reading of it, that, there's some weaknesses there. Councillor Dennis.
Thank you. I'm just, when was it, in what body was it agreed to extend the funding for key partners for another 12 months?
It was agreed with the leader and deputy leader, but within the existing budget envelope. So the key partnership budget envelope is agreed as part of the annual budget. So it's within that window that was approved, with the leader approving that extension. And I think it was important that we had that extension so that we could do a thorough review of those key partners, something that we haven't had a chance to do for a number of years.
Okay, thank you, Neil. Right, any more there? Any other comments? I think I just want to maybe mention one thing which was brought up in advance of the meeting under the finance accounting system, which is a business continuity. So it says here that work continues to write a business continuity plan. I don't think that's strictly correct, is it, Lisa? I think we actually do have a business continuity plan for the main finance system, which I'm encouraged by. Perhaps you can just confirm that.
Yes, no, that's exactly right, Chair. We've got a business continuity plan. One of the things we want to do is doing some of the testing of that plan. So an example of that would be running a housing benefits payments run, assuming that all of the council systems are down. So if all of the systems were down, how would we make payments to our housing benefit customers? So that's something that we're talking to the revenues and benefits team about, and staff within our team that do those payments, to check that we can take a backup and actually just pay housing benefit claimants what they would have had in a previous payment run. So it's some of the testing around payments that we want to spend more time on and take forward in the next few months. And we've got meetings in the diary to do that. Thank you.
Yes, sorry, I've just found my other note for this. I noticed that the ICT and cybersecurity audit is scheduled to start shortly. I wondered if this was on track, because obviously more and more we're hearing, particularly of phishing scams, etc. So it's really important that we keep, as a council, we keep up to date on these.
Thank you, Chair. Thank you for the question. So yes, I think ICT audit is across the country one of the areas where we need to make sure we've got the right skills and knowledge in place to undertake the work. And we've been working quite hard over the last few years to do that. So I think it's definitely a piece of work. It's on track. I've got no concerns about delivery in that respect. And yeah, we'll be reporting back to the committee in a few months' time on that one.
Okay, thank you. Councillor Dennis.
Thank you. So this is just in relation to the grounds maintenance section of the report. I think it was quite interesting to read this and read the issues that sit within that department, different databases, down to the grounds maintenance team to decide what works are required and appropriate frequency, will agree a schedule of works, etc. And what I think I'm concerned about is how that fits in with the commercial work. So it says any private work delivered, resource is identified prior to entering any new contracts. I think the sort of feeling from my residents and town and parish councils is there are areas of green space that the council obviously owns and needs to maintain, and aren't being kept to the standard that we'd like to see, yet the council is able to offer sort of private work as well. So just wondering where the checks and balances are for the amount of resource that is available to be able to take on new commercial contracts.
Okay, thank you, Councillor Dennis. I'm not sure who's able to answer that.
Chairman, is that something we can come back with a written response to the committee on to give those assurances? Thank you.
Okay, thank you. Yeah, that would be helpful, I think. Let's take that away then as a question. I mean, I do personally sort of worry a bit that there's a large number of actions under that one. 8 medium priority recommendations and 1 low, and 4 opportunities to drive operational improvements. You know, this seems surprising that it's got reasonable assurance given all those needs and changes, but you know, we trust the team, but I do think we need to sort of keep on top of that. It's not a massively important area, but it is a very visible area to residents, so it will be quite useful to see that as time, you know, maybe another review of that in due course as time goes on. Okay, any other comments? All right, so let's go to the recommendation then. Just before, I just want to make sure that we do change or modify or take a note of the wording on business continuity, that there is one that exists. I don't want to give the impression that we're just writing it from scratch. So perhaps we could just put that in the minutes if we could, Amelia. And with that, the recommendation is that progress made against the audit plan and key issues are noted and approved. Okay, is that the right wording? Well, it's the wording we've got. I mean, if you don't think it's the right wording, you can vote against it. We're approving, we're noting the recommended, and I think we're essentially approving that the assurances are consistent based on the information and detail that we've been given by Devon Audit Partnership. That seems to be fair interpretation. Okay, well, I'd propose that. Is anyone seconding it? Oh, yeah, Councillor Yard, you've passed off the mark there. All those in favour? Carried. Okay, thank you. All right, good. Let's go to the next one then, please. So, Bishop Fleming, external audit plan, and Nathan Coughlin, please. Thank you very much, Nathan, for joining us, and look forward to hearing your comments on this.
Thanks so much, Chair. So this is our second year as your external auditors, and the document you've got in our packs today is our external audit plan for the March 25 year end. So we're required to communicate a number of things with you as those charged with governance for this, but essentially this document sets out our proposed approach for this year's audit and our initial assessment of risks for this year. The scope of the work is almost identical to previous years, so essentially we'll be looking to give an opinion on whether the council are a true and fair representation of the results of the council and the position at the year end, and that they comply with the requirements of the Code of Practice and the Local Audit and Accountability Act. And alongside that, there's our work that we need to complete on value for money as well, which we report back to you separately on as well through our annual auditor's report at the end of the cycle. The key part of the document that probably wanted to talk through a little bit with you is the risk areas that we've assessed for this year end's audit. Some of these are prescribed by auditing standards. Some of these are around your individual larger balances in your accounts and areas of judgments in your accounts. And they are almost identical to last year's assessment of risks. So the first one is around management override of controls. And these are in the table started on big page number 56. And that's required by all auditing standards to be a significant risk area for external audits. And that's about having the right level of focus on areas of estimates and judgments that go through the financial statements, or management's ability to bypass control environments. So typically that would be through posting entries directly into the finance system through journals. So we use data analytics tools, and we reported some of the output for that last year, and we'll do so again this year, to assess that the whole population of data of journals that are posted into the finance system, and can filter that down and focus our testing on high risk areas based on who's posting them, what kind of codes they're going to, and what values they are. In terms of the estimates and judgments, we've probably pulled out the most significant ones in the next sort of significant risk areas anyway. So I'll go through those now. Those are around valuations. So we've got three separate ones in there. One's valuations of land and buildings, one's valuations of your investment properties, and then the other one's valuation of your pension fund and your share of the assets and liabilities. All those are significant risk areas because the scale of the values that are involved in your financial statements and the areas of judgment involved. So in each case, management takes it's an expert involved supporting management in forming their judgments and views on this. So whether that's a valuer in terms of the properties, or whether that's the actuary producing a valuation for your share of the pension scheme. And our approach is probably similar in each case as well. We want to make sure that the input going into the valuers and the experts are accurate, the assumptions they've made are appropriate, and then the output there has been calculated appropriately and accounted for correctly. So that kind of summarises our approach in each case. And we use our own specialists and experts where we need to in each case in terms of pensions and valuations as well. The area that is new this year is the additional risk over the page onto page 58 is around a new accounting standard. I say new accounting standard, it's been around a long time, but it's been a long time for local government to adopt it. So this is IFRS 16 and leases, and local government have pushed this down the road in terms of implementation, because actually it's a big piece of work for the local authority sector to actually firstly identify all the data needed to be able to account for this. So essentially what this does is to say where we've got longer term leases that were traditionally accounted for as operating leases off the balance sheet, if they're lasting for more than a year, in most cases now they're going to be brought onto our balance sheet. So essentially it will end up with an increase in our fixed asset balance and an increase in our liabilities. It won't have a huge impact materially on the net position, and it's quite a large piece of work the management will have to go through to identify this and calculate it correctly. Management have been well on top of this. They've taken advice and have got a view of where they think they're going to end up on this. We've put it down as a heightened risk area for increased focus rather than significant, because the initial view is that it probably isn't going to be huge material numbers we're talking about here, but it is a fairly chunky piece of work for management to go through and then for us to check. So we've flagged that.
Yes,
Thank you. What's our biggest lease that's over 12 months? Do we know of one?
I might defer to Ms. Scotton if that's okay.
Yes, of course.
I'm not sure if that's something we can divulge, whether it's commercial or
I mean, maybe it's, I don't know, Nathan, whether you'd finished, and maybe we give a chance for the finance team to see if we can share that information. If you haven't finished, please carry on, and we'll then come back.
I'll carry on and Phil while you research. Okay,
yeah,
absolutely.
Yeah, thank you. Then we're not sitting around waiting.
Yeah, and then so that is the assessment about external audit risks. Underneath that table, there's a paragraph that confirms that from the value for money side that we've not identified any significant risk areas that we need to filter into our assessment. But as I talked when I presented the assessment last year, our review of this will now build upon that sort of baseline position we had last year and drill into some areas in a bit more detail. The other parts of this document sets out a timeline, the team structure, and the fees, which are set as through the public sector audit appointments scale fee process, and also the other final part is about ethical issues that we need to confirm to you around controls over non-audit services, and under the contract we have with the PSAA, we don't do any non-audit services with you, so it's just a pure independent audit service. So I was going to pause at that point and take any questions.
Okay, we've got a raft of hands up there. Okay, Councillor Yardy, go again.
So coming back to the leases, if a lease moves from off balance sheet, I'm calling it, becomes a fixed asset, then we will have a change in our ratios about how healthy the business. Well, one of those ratios will change. Does that impact any of the borrowing impact? Does it have any? In my previous industry, in a chemical industry, a massive impact, but here it doesn't seem to have an impact.
I think our figures are very small in comparison. I think
Yeah,
that
It all
will be
depends
the
on the
difference.
size
Yeah,
of the lease, I suppose.
yeah.
Yeah, I think it's a really valid point. In other commercial sectors, essentially it can move where you now get assets on the balance sheet where historically you'd have an operating charge for just paying a lease, and now you're going to have some depreciation charge and some interest charge going through. It could change EBITDA metrics in the commercial world, and it wouldn't have the same kind of impact because the numbers are presented differently in local governments.
Yeah, I think if we can see what or if the finance team, Claire, if you could tell us the total lease figure that we've got. I mean, I think I saw it about 50-something million, 50-something thousand, rather. I beg your pardon.
I was to say.
Millions, billions. You know, these numbers get confusing after a while. Yeah, but I mean, I'm sure you've got and roughly, if we can guide. You know, what sort of leases we have, even if we can't divulge the company names, if you have that, or you could get us that in a few minutes when you're ready. Yes, Councillor Rake.
Thank you, Chair. Nathan, you obviously see a lot more of these documents than we do. We only get to look at one a year. I mean, I don't know, maybe we're your only client, but I'm sure that's not the case. I mean, is this report, notwithstanding the section on IFRS 16, is it largely boilerplate?
So there's elements of it that are, yes, and in terms of the risk assessments, you'll see a lot of those risks being consistent across a number of local authority clients. Yeah.
So if we turned on track changes compared to this time last year, there wouldn't really be terribly much. I mean, I'm just trying to sort of...
Yeah, so as I said at the start, essentially, the approach is broadly similar. There's nothing, apart from the changes into IFRS 16, there's nothing significant that's changed in our approach. And as we've gone through last year, we've not had any surprises that means that we think there's extra risks that we need to focus on this year. So yeah, absolutely. So this is consistent with our approach last year, and that was, I think we felt that we gauged it pretty well in terms of the initial risk assessment last year through the handover process with the previous auditors. So yes, it is consistent.
Thank you.
Okay. Yes, Lisa.
Yes, thank you. So in terms of things that we lease, they are quite small. So in total, about 70,000. But a couple of those things are around depots for the waste service. Two of them, Tall Quarry and the Ivy Bridge depot. So they're quite small.
So 70,000 is what? Is that's the total asset value?
That's
not
the
the lease
total
repayment
annual
per year,
amount. That's the annual amount. Yeah.
The annual asset value or the annual?
The annual lease amount. Yeah. As
Okay.
far as I understand it.
Okay, so the liability is going to be somewhat higher than that, and the asset value.
Yes, in terms of the lease term. Yeah, but that's the annual amount that we would pay. Yeah.
Okay. Councillor Rake.
Thank you. Just on IFRS 16, from memory, I think this is sort of symmetrical because presumably it's not impossible that the council could be a lessor as well as a lessee. So it would affect both sides of that, or if you were the lessor, was that already on your balance sheet?
If only it was that straightforward. The other side of you just have to follow the accounting standards that are applicable to you. So you can end up with an item that can be on more than one organisation's balance sheet because they adopt different accounting standards. So, for example, UK accounting standards are following this IFRS implementation process a couple of years in arrears. So at the moment, UK accounting would be different to this, and that's a number of the local companies around here would follow that. So you can get inconsistency in the accounting world, I'm afraid. So you need to follow it correctly for your organisation, and this is being driven because to drive consistency eventually with international accounting, and UK accounting is following. So you will get to a more consistent position.
Sorry, I think we might be slightly at cross purposes. I was saying that we could assume the leases that Lisa was just talking, Lisa's leases, the leases that Lisa was just talking about.
Those are leases in.
We
yes.
have those leases that we have taken, but we could presumably also grant them.
Sorry, yes, it is symmetrical within IFRS 16. Yes, essentially, yes. So there'll be some cases where it'll go the other way. Yeah.
So Lisa, perhaps are we lessors in any situations?
Yes, we are. So, for example, here at Fullerton, we lease out areas over the other side of the building. Yes, but that IFRS 16 is just about the leases coming in.
Okay.
Yeah.
It's not symmetrical.
No.
In that sense.
In that sense.
Okay, but I mean, think what what's behind the question is, for example, when we lease out a leisure centre, for example, that we might own, we don't have to change our accounting this year because of that lease, because of IFRS 17.
I think we're finally there, Chair.
We are there on leases, and any other questions on that or other things? I do have a question on the timing, Nathan, because I noticed that you don't have a date for submitting your audit report, which is a bit of a shame. Maybe that's something that you could advise us on verbally if you have an opinion on that, because I think what we're keen to do is to accelerate the timeline based on, you know, all the work the finance team is doing and making sure that we can plan things smoothly as the year goes ahead.
Yeah, and that's our ambition too, actually. So we have agreed a timetable so that the work's completed over the summer, as you can see in there. And I think that was purely TBC in that we didn't have the date of the next audit committee to bring it to. The only thing, again, of course, that is slightly out of our control is the timing of County Council's pension scheme audit, which obviously we're liaising with Grant Thornton over again, and they're committing to putting it early in their cycle again. But it is reliant upon that third party within that. So we anticipate they will come to I guess your September, is it due to have one? October? Yeah, so the October committee.
Yeah, I think that would be very good. We don't have a date yet for October because it's subject to meeting in May to decide the dates of meetings, but I think we would assume we've got early or mid-October as we had last year. And if we can keep to that, that will be very, very good. All right, thank you. Okay, so unless there are any more questions with that, then we resolve to note the contents of the external audit plan. Do we have, myself and Alison are proposing, do we have those in favour of noting? Looks unanimous. All right, thank you very much, committee. That's very good. Did you have a point, Anna? No? Okay. You look like you wanted to say something, but all right. Thank you very much, Nathan. Appreciate that. Okay, so let's go to item 8 then, the capital strategy. And, well, we did have Councillor Brazil wanting to be here to talk about this question. So I wonder if we should just take a 5-minute break, because it's very, very warm and you'll be taking, taking off all sweaters. So if the committee doesn't mind, let's just have a couple of minute break and start again just around 3 o'clock, in time for a tea, because we're doing nicely on timing. All right, thank you. Okay, thank you. Let's restart then. And Councillor Brazil apparently is on his way, so that's good. So let's move to item 8, the capital strategy. Do we take them all together? Capital, treasury, and treasury management and investment strategy. Are we taking them all together, Lisa? I imagine we are, because they're all
Yes,
grouped
please,
together.
Chairman.
So
Thank you.
we don't have Councillor Brazil yet, but maybe, Lisa, we can ask you to introduce these items, and then when he arrives, if he can add or ask questions as he wants to. Thank you very much, Lisa.
Lovely, thank you, Chairman. Yes, so these are 3 strategies that we would write every year. There is a legal requirement that we recommend these strategies to council before the end of March. So these would go forward from today's Audit and Governance Committee to full council at the end of March. And what the strategies do is they set out the council's capital expenditure plans for the next financial year. That's within the capital strategy. The treasury management strategy would set out our treasury management sort of principles and policies, as well as the investment strategy. So at any one time, we might have somewhere between 20 million to 35 million to invest. The amount that we've got to invest changes depending on where we are in the financial year. Because towards the start of the financial year, we would have more funding because we're collecting money in from sort of council tax and business rates, and paying that money out to our preceptors. And as we get towards the year end and around March time, then our investments start to drop back down. So the importance of these strategies is to set out what the policies are that the finance team would need to work to in terms of investing the council's cash, and in terms of what credit rating we would be looking at. We did have treasury management training for members, and we always arrange that before these strategies come to committee. So in terms of credit rating, we would be looking for a Fitch credit rating of F1 or a long-term rating of A-. So those would be the minimum credit ratings we would look for. We can access the credit rating system through our treasury management advisors on a daily basis. So when a member of the finance team looks to place an investment, they would check the credit rating of that institution or counterparty before an investment is placed. We would also check things like how much have we already got invested with that counterparty. So this policy would set out our counterparty limits as well, which are shown there on page 121. So for example, 6 million per institution for local authorities, 7.5 million for fixed term deposits with banks and building societies. So in terms of where does the council invest its cash, it is mainly with banks and building societies within the UK that meet that credit rating criteria. We also invest with money market funds. Those are very liquid, they are AAA rated, and we've got a limit of 7.5 million per fund being recommended. We also have some money invested with CCLA, so we've got 1.5 million invested with the Property Investment Fund and 2 million invested with the Better Word Cautious Fund. So in the main, our investments are very liquid. We can access those investments, for example, money market funds. We can literally get the council's money back the next day. Some of our fixed term deposits, they may either be a month, 3 months, 6 months. Occasionally we do a 12-month investment, but we haven't gone over that 1 year investment. So I think those are the main bits I wanted to highlight within the strategies, Chairman. We have got some of the prudential indicators, which is again something that we need to set out within the policies. So if we look, for example, at the council's capital financing requirement, that's on page 96 of the agenda. What that does is set out how much funding the council would need to borrow to finance its capital programme. So you can see there that that would increase in 25-26 from the current position in 24-25. So that would be around borrowing for the Freeport. That borrowing is would be repaid by the business rates, so it's self-financing, and there's also borrowing within that figure for the council's waste fleet, which was a previous report that was considered by members. Going forward, for example, on page 101, you can see there our current PWLB debt. So at the moment, at March 25, the current level of debt would be 13.3 million. And you can see there how that compares to the capital financing requirement of 21.1 million. And the difference there would be projects that the council has internally borrowed for. And on page 100, you can see where the council's mainly got its investments currently. So March 25, we're forecasting to have just under 6 million in short-term fixed investments, around 15 million in money market funds, and we have got the CCLA investments there as well. And the average borrowing rate of that Public Works Loan Board borrowing is 2.547%. I'm very happy to take any questions, Chairman. Thank you.
Thank you very much, Lisa. That's good. We've just started this, Julian, so welcome. Thank you. Okay, Councillor Yardy, I think perhaps was. I know. He puts it up slightly higher. Doesn't he?
Sorry. I thought you were saving the best for last, Chair. Just on the Freeport borrowing, one is how much certainty is there around the timing of when that borrowing will be made? And the second is, whilst I appreciate that it's self-financing in the long term, presumably there's some, sorry, I don't know why I'm presuming that. Is there some kind of a lag between, I mean, big lump of cash out and then a trickle of, or a steady flow of cash in, but I mean, does that have cash flow implications? And yeah.
So with regards to the timing, it could be before the end of March, or it may slip into 25-26. Haven't got definitive timescales on that at the moment, but it's something we are obviously progressing. In terms of cash flow, yes, we would look at when the best time to externally borrow would be, and we'd take advice from our Treasury Management advisors on that. That payment is not all in one go, it's in instalments, so we would look at the instalment payment profile, and we have got match funding from government for that. So that match funding we currently have in our bank account, so obviously we would use that first. And then we would look to draw down the external funding. We have profiled when we think the business rate income would come in. The maximum annual repayment of that borrowing is about 280,000 per annum. That's the capital repayment and the interest. And the way that the accounting regulations work is that in the very first year when you've bought it, you don't have to set aside the provision for the MRP. You don't have to do the principal repayment bit. That's the way borrowing works. So in the first year, you would just have the interest. So we've modelled that through. We don't think there'll be a significant impact on cash flow from the assumptions that we've made to date. If that's helpful, so, Chairman.
If I may, Chair, just to follow up. So from what I've understood of what you've just said, we'd use the match funding first. So by the time we actually borrow, are you saying that there will already be some business rate income coming in by the time we actually have to borrow?
I think some of the business rate income may start to be generated, but no, I don't think there would be a significant amount. I think that's more likely to be generated in 26, 27 and 27, 28. So early on there would be a small impact, a cash flow impact, which we would look to use our business rate retention reserve for, just as we would any other business rate income. So yeah, we have modelled that in the early years we may need to use a small amount of that business rate retention income, but I am being consulted on, there's a national consultation at the moment around whether there any of that cash could be available up front to local authorities from Freeport business rate income. That's at very early doors at the moment, but that is something we will start to progress. Yeah, but it's something that I'm feeding back on at the moment, because all of the Freeports have this timing issue. So it's something government are looking to potentially address in a positive way. Yeah.
And just lastly, Chair, with your forbearance, so you say that the match funding is currently in our bank account, so we're presumably earning interest on that.
Yes.
So there's an opportunity cost as well of the loss of. I mean, presumably it's a fairly substantial sum, and we'll lose interest income when we come to pay it out.
So at the moment we are benefiting from that income, and we would, when we close down our accounts for 24-25, we would look to set that aside into the business rate account, because really that is ring fenced for the Freeport and for the purposes for which we had that funding. So we would keep that separate within the business rate reserve. Yeah, thank you.
Thank you. I'll leave you to the tender ministrations of Councillor Yardy.
Thank you. I've got two questions, but first one, 2.7, which is on page 78 of 212, which relates to climate biodiversity. The arisen in principle allocation of 2 million. That's the sentence that starts. When I read the paragraph 2.7, it felt a little bit light in terms of detail. I presume there's a business case, and somewhere in that business case, the borrowing on the land and the DEFRA acquisition, etc. There's going to be it's going to show that there is a return, and we've got a benefit in terms of our goal for reducing net zero. So is that something that I think you mentioned it was coming to exec, or to that business case was coming to the council?
So at the moment, the 2 million is a in principle allocation. So that would be the maximum amount of borrowing for the purchase of woodland. What we would look to do is to lever in external funding from DEFRA for a significant amount of that woodland cost. And we would look at the biodiversity credits and net gains. And what we would hope is that any amount that we borrow as a council, that the credits would pay for that, because really the borrowing has to be self-financing. So we would look to have a business case, bring that back to members that said, we've managed to attract X amount of DEFRA funding, and we think the biodiversity credits would facilitate borrowing of a certain amount. So at the moment it's an in principle allocation. The detail of that would come back to members at a later stage with a business case around that.
Thank you.
Councillor Nix may have a similar point on this same similar topic. So could I ask her to just chip in so that we keep on the same? Thank you.
Yes, thank you. I'm sorry to jump in. But yes, Lisa, if we didn't get the DEFRA funding, how would that be funded going forward?
We would have to. It would have to stack up on a business case for us to bring it back to members in the first place. I mean, I think we would be quite confident in getting DEFRA funding. We've got DEFRA funding for the ones we've done in this financial year. If we couldn't, then we would be looking at the amount of income that we could generate really from the credits for that, and see how much borrowing that would that could be underwritten with the income that we think that we might get in. Because like I say, it may not have to be fully self-financing. If members were happy to, that some of that cost would fall on the revenue budget, that obviously that's another alternative option for members. But the detail would come back to members at a later date in 25-26. But we just wanted to show that as a sort of in principle allocation of £2 million. So that is within the figures in the capital strategy. Thank you.
Yeah, Councillor Audit.
So I'm now speaking to the instabilities and volatility in the markets that we have at the moment, because due to, I'm going to just say Trump, Putin. And there's a possibility that we're going to have very, very short-term changes in stock markets. And there's also a shift in spending to defence from, let's just use the example of Porsche making tanks again, or something like that. What I'm trying to say is that they're probably going to move towards defence spending. So my question is, if we are we subject, are we going to be able to manage urgently, should there be changes in the stock market? And will we be able to take advantage of the opportunities that arise, rather than being a laggard, in terms of being able to adjust our portfolio of investments so that we maintain the targets that we've set ourselves in terms of treasury? Big question.
Thank you. At any one time, like I say, unless we're at the year end, we probably have around 30 to 35 million being invested of the council's cash investments. The last report that came to the committee set up at that point in time, that was around September, the council held 32 million. And in terms of where that was invested, 11.8 million of that was with money market funds. Now those are sort of cash instruments where the risk is spread. We can get that money back the next day if we decided to withdraw our investment from that. And we also had 17 million invested with the debt management office, so that's money invested with government, with HM Treasury. So if we look at a point in time, at that point in time, we had 28 million of that 32, where we could get the money back really within a week, and probably within 2 days. So our portfolio is very, very liquid. We can access that cash very quickly. So if members wanted to change priorities or change where that money was invested because of how we invest it, i.e. money market funds, cash instruments that we can get our money back, or with HM Treasury, we can get our money back very, very quickly. So we can react to economic conditions. And I think that was seen particularly during the pandemic, because we didn't have long-term investments. We had kept our investments short. When there were concerns around cash flow, we knew that we could get our investments back within a week. The only long-term investments that the council's got is the money, the 3.5 million we've got invested with CCLA. So you've got 10% of the council's portfolio, which is long-term, and that is tied up in property, with the local authority property fund within CCLA. And during the pandemic, CCLA actually said, you can't have your money back, and basically did a stop on any dealing within the pandemic period, because obviously if all local authorities said they wanted their investment back, they couldn't liquidise that because they had bought properties up and down the country. So those CCLA investments, they are long-term strategic investments. So the council has 10% of its portfolio in long-term investments, but the other 90%, I would say, very liquid, very short-term, and you know, the council doesn't have its money tied up for long periods of time for the largest part of the portfolio.
Thank you. That sounds really reassuring. Thank you.
I don't know if this is the right time to mention this, or maybe after our leader's presentation, but was it a decade ago or more, there was the financial crash, and of all the banks that actually never even felt it, was two of the sustainable banks we have, the Co-op and Triodos, and it was because of how they invest their money, social responsibility, environment, blah blah blah, causes rather than the big nuclear fuel, gasoline, etc. And I, watching my training recently, Treasury Management training, Councillor McKay was commenting on ethical investments, and I know people wince at this, and we had the same response that we've had before, that actually you'd have to break down a lot of the council's investments to really make them to see where the ethical investment could be and quantify that, etc. Just a comment, really, that there are a number of investment groups that are B Corp standard, and for those that don't know, you might know. Shall I tell you what B Corp means? I'll do it anyway. Very briefly, these are companies that are verified, certified to meet high standards of social and environmental performance, and there's a lot of transparency there. And there are a lot of major investment companies that have this standard, and of course, diversity is key when you're investing, but I just wondered if that might be considered as in the future regarding any kind of investment strategy, to have a brief look at those companies that do hold B Corp certification. Thank you.
At the moment, the council's strategy is around investing in banks and building societies within the UK that have got an actual credit rating. Or investing with government through the HM Treasury. So, like I say, in the main, our investments are either with money market funds, which are AAA rated, or they are with HM Treasury, or banks or building societies. It's within the council's gift to change that investment strategy, but we do have to meet the principles of security, liquidity, and yield. Very happy to take a look at the particular companies that you're referring to, Councillor Preswell. But if the council wanted to change its strategy, then it would have to look at, does it still meet the principles of security, liquidity, and yield, particularly around things like credit rating. So we would need to look at those companies' credit rating. We would need to look at how liquid would those investments be, what would the yield be. As you say, when the economic crash happened in 2008, obviously there were some investments around then in things like Icelandic banks, and that was very much around the credit rating of those banks, and as long as the investment that has been made has met the minimum credit rating at the point the investment was made, then it's a lawful investment which has been made. Where some councils come unstuck is where an investment was made that didn't meet the minimum credit rating criteria which the council had set. So as long as members are happy with the minimum credit rating you'd be setting through these policies, which is Fitch rating of F1 and a long-term rating of A-, then as long as officers act within that credit rating, then it would be, as I say, a lawful investment in that respect. So members would set the strategy, the policy, what the minimum credit ratings are, and then that is the strategy and policy that the officers have to follow when they're investing on a daily basis. Hope that's helpful, Chairman. Thank you.
Yes, thank you very much, Lisa. Councillor Rake.
Thank you, Chair. I mean, I totally understand Councillor Presswell's desire for us investing ethically, but I mean, we're not investing directly into the equity of any company. I think that's an important thing to bear in mind. We're not buying the shares in any company at all. What the majority of our investments are in the big pool of liquid money that particularly banks but other institutions need to borrow or want to lend overnight because they've got a bit too much or a bit too little, and we're part so the money market funds we're in are part of that smoothing process. Someone in the treasury management training sort of said, "Oh, it's BlackRock," which I quite understand. I'm sure BlackRock are horrible, but there's a difference between investing in BlackRock or even one of the funds, the equity funds they might run, and the fact that they manage a money market fund where that money goes is very different. I'd also note that the financial crash of 2008 2009 was actually caused by the long-term effects of a very ethical policy in the United States, which was designed to get more people from backgrounds where they hadn't been able to own their own homes to be able to own homes, and the long-term effect of that was almost broke the world. So that's just in passing.
Yeah, thank you, Councillor Rake. I think it is a very important distinction we need to just take on board, that we are investing probably 90% of our money in basically cash equivalents or government bonds, effectively, or government schemes, and a very small amount in property, and we're not making any investment in any company or anything like that, which could be more risky or more specific. So it's there's a lot of terminology in this, but I think that is where we are. Whether we want to change it or not is another question. But let's just be clear what we're doing and what we're not doing at the moment. And that's a very well-made point, Councillor Rake. Thank you. Okay, any more points here? I've got a couple, if I may. No. So what I'd like to just question, if I could, Lisa, is the capital spend in the coming year, 25-26, where we're using 4 million or so of our own resources, and we're spending nearly 13 million. I know this is presumably the list of capital spending items that you've got in the document. So the waste vehicles, the free port, the housing. Then we're, that's starting to build up quite a lot of capital spend. And presumably each item has been approved separately, but I think what worries me a tiny bit is if this needs to carry on for any reason. Do you have, I see that the estimates in future years go down significantly, so I guess my question is, are we fairly confident we're not going to spend or need to spend a lot of capital in the year 26, 27 and beyond to add to our debt? Do you have a comment on that? How sure are we of the plans going ahead?
I may
refer to the leader, I think.
I mean, Lee, we've got our capital programme in there, and that's the spending from it. I think probably more concerning than that is the possible budget gap that which we're looking at about 3.5 million next year. For 26, 27, that we may well have to fund from reserves if we haven't got anywhere else to come from, which is obviously completely unsustainable. Now, you may think, well, so what? Because we won't be here anyway, so it doesn't matter. But I think in that sense, it's more concerning. At the moment, the capital projects have all been passed and are, and we feel confident that they're either an essential part of delivery of our council plan, or indeed have business cases that go with them that mean that the funding, for example, the Freeport will be, we will get that money back. So, you can never be 100% sure, but I think that that we've got, pretty confident that we're okay for the moment. I mean, so in that sense, I'm not too concerned about that, if I'm honest.
Yeah, thank you, Julian. I just want to refer to page, when I find it, 82 or 84, I think, which talks about the repayments. Because what, related to this, if we borrow up to our set upper extended borrowing limit, then it's the repayments or the interest and capital repayments that are going to start to come very high. So, and that depends on the interest rate, of course. So, do we set some kind of limit, not only on the amount that we borrow itself, which we've set at a maximum of 50 million, but also on the repayment figures or the minimum finance allowance, so that we don't start to use all of our operating income or our revenue on debt and interest repayments. How do we judge that, Lisa?
Thank you, Chairman. So within the strategies, there is something called the operational boundary, which is your operational boundary for borrowing, which at the moment we are recommending that is a limit of 35 million. At the moment, we've got borrowing of 13 million. Even within these within the capital strategy, we wouldn't be going higher than sort of 21, 22 million. So you have got some headroom there if this is the operational boundary that is set of 35 million. I think what we do is we look at the financial metrics. So based on our current debt of the sort of 13 million, and even going forward into 25, 26, our sort of interest and MRP payments would be about 1.34 million. So we tend to look at that debt servicing as a proportion of things like core spending power. That's the financial metrics that government bodies like the Office for Local Government, I know they are going in the future, but in the past, Offices for Local Government, those are the financial metrics that they set for councils, and that would be about 10.8%, that debt servicing as a percentage of the council's core spending power. Now, there will be some district councils who, their debt servicing as a percentage of core spending power will be huge. Because there are some district councils that have got borrowing, way in excess of sort of 900 million plus. Only a very small number of district councils, but there are some that have that level of borrowing. Obviously, we are nowhere near that at 13 million at the moment. And even if we went up to 35 million, when we had some work done a few years ago to say of an authority of our size, what's the maximum we should ever borrow, that figure came out at 75 million. So we still have got quite a bit of headroom, I think, within our borrowing figures. So, for example, if there was a capital project that came forward that was going to give a good income stream to the council, then obviously we would bring that forward to members and say, there's a business case here for the council to borrow money, a bit like we might be doing with the woodland, if we can attract some external funding as well. So it's all about what sort of projects come forward over the future. There could be projects to generate an income stream for the council or reduce expenditure for the council. So I think we would look at each business case as it comes along. But I think our debt servicing as a percentage of our budget at the moment, if we were to benchmark that against other districts, I'd say we'd definitely be in the lower quartile. Our borrowing levels are a lot lower than similar sized councils at the moment.
Thank you very much, Lisa. I mean, I think that's very good to hear. But and I would say 10% or 10%-ish of our spending power is probably okay. But I wouldn't personally want to see it going up very much more. So I do worry a bit that people are suggesting it could increase 5 times to 70 million and still be okay. That's a little bit worrying, and I hope we don't get there. Yeah, Julian.
Yeah, I think the point that you raised there is very pertinent and very important. And Lisa has alluded to various councils that have borrowed hundreds of millions and find themselves in a terrible predicament. And if you look at the reports into those councils,
The reason how they got into such a mess was because basically the whole transparency of how those decisions were taken was pretty opaque. And, you know, I think that as a audit and governance committee and as a council, we must be absolutely sure that any investments that we do make or spending that we do is very open and transparent, so that all members, they might not necessarily agree, but you can see there is a you know, an audit trail about how we arrived at that decision, and you may not have agreed with it, but that was the decision we took. And to be fair to this council, we have always been pretty open and transparent about that, and long may that last. Just as we're on these, I mean, I've always been slightly concerned about some of the I don't know, protocols within the capital strategy in particular, whereby we were looking at potentially quite high risk projects that would not actually go to any formal decision making committee, be it the executive, probably being the most relevant one, and as such could never be really properly scrutinised if people didn't agree with it, which I think is bad governance in my view. So I'm not suggesting that we need to rewrite all our strategies, particularly the capital strategy at this stage, because I think that would be rather waste of time if in 2 or 3 years' time we're not going to be here. But I do think that it is worth noting that we should that we should say, as a council, we would expect any decisions made on any spendings that they are that they come to. I would, if we got the time to come to this committee in the first place, to look at the risk involved, and then to advise the executive as to whether you feel that this is a suitable project to progress with. So you know, it's yeah. I just say that because I mean, we have been lucky as a council. Well, not lucky actually. It's not by luck, but we haven't got a great amount of borrowing, and the borrowing we have done has been pretty prudent. I mean, there's one example that I would, which has always been a slight bugbear of mine, and that was the investment that we made in the Dartmouth property, that I never felt was something we should have done. And all right, it just about washes its face. But if the primary leaseholder there walks away, which they can do in a few years' time, then we may find ourselves in a bit of a predicament, because we'd have to find someone else to pay the rent, to pay the interest and the capital repayment. But that was done. But I think that was an example of whereby that never came to any committee, because they said that had to be done at pace. That's the old, if you don't do it now, you're going to lose it sort of thing, which always concerns me as well. But that's it. And while I've got the, if I may also just move on to another point, and Simon raised it about the Freeport, actually, is that I do think that there is another angle coming about the Freeport that is worth looking at, and that is the fact that we all know that with local government reorganisation, that Plymouth has an appetite to swallow up the Freeport area. Now, we need to know whether, if they do that, and we've spent £3.5 million buying it, where does that debt lie? Does it lie with the district council because it's our debt, or does it lie with the new owners of the Freeport area, which would be an enlarged Plymouth? But I think it's a crucial question that we need answering, and logic tells me that it would go over to Plymouth. But that might not necessarily be the case, in which case I think we should reassess whether we think it's worthwhile, or whether we just say to Plymouth, look, we're pulling out, not because we're not in favour of it, but because if you're going to get it, then why don't you pay for it? It makes more sense for them to buy it if they're going to have it, rather than we do, and the risk that entails with us. So I think that's something that you as a committee may want to. I mean, you have your working group on the Freeport, but I think it's something that absolutely you should look at, and see what the worst case and best case scenarios are there, and again inform the executive and indeed the whole council as to where you think our position should be on that. Because I think we'd look pretty silly if we bought it and then we just hold the debt and they get the benefit of it on that. So that's really all I've got to say, Chair. Thank you.
Yeah, thanks very much, Julian. 2 points that seem very pertinent and that we should consider. Councillor Yardy.
Picking up the point by Julian about the timing of any investment that we would make, can you just clarify, Lisa? Please, could you clarify? Have we given permission that there should be that you've got in principle powers to make an investment, or do we need to revisit that once later, or like before you actually push the button on any such investment, just to make sure that we check in with the devolution and what's occurring? Because what I wouldn't want to see happening is that, oh, you've cleared this, it's due to go through, press the button, and in actual fact we should have had due to the evolving circumstances of devolution, we should have just had a check at that point. So I would like to know where we sit, and do we need to put a check and a balance into the decision making to give us more comfort.
Thank you. So at the moment, the decision has been made, but I think going forward, I mean, obviously we would discuss this with the leader and executive members as to which way they would prefer the governance to go on that. So if they would prefer that, something comes back to members, or it's looked at as part of the Freeport working group, then yes, certainly we can do that. I think at the moment, the senior leadership team would write a briefing note for the leader and executive members on that.
I'm just concerned that as the oversight and governance, we may not have a meeting scheduled when that button is pressed. We may miss such an opportunity to...
No one would be pressing any buttons prior to...
I meant it as in...
Yes, no, just to give you that reassurance, officers wouldn't proceed without consulting members first, obviously. Yeah. Okay. So a process will be put in place. I'm not sure what that process will be without consulting the leader and the chief executive at the moment.
Do we need to minute that there will be a process put in place, or do we feel that we're sufficiently comfortable with existing processes? I don't feel comfortable that there's a process by which the investment could be triggered, and I know what you're saying, but it would be nice to minute that will happen if it came to such a decision.
I mean, I haven't had the benefit of being able to speak to the leader or the chief exec about this, but maybe the Freeport working group would be a good place. And I think there is a meeting coming up shortly. Councillor Nixon, not quite sure when it is, but 27th of March.
27th of March.
Okay.
We've actually got people coming in to speak to us on net zero on that date.
Oh, right. Okay.
However, we could put that for the following date, Councillor Yardy, if you would be agreeable to that. We could make a different...
Yeah. Certainly. I would just like to make sure that either between the exec or the oversight and the group that we're talking about, that it's captured and we do something about it. Whichever way the method is, I don't mind. I wouldn't want to find out, we missed it.
Yeah, I think if I could just chip in, I think we need to be clear what we're really concerned about and what we're really asking to be looked at. So my understanding is we've got the money from government, therefore we already owe the government repayment. And what is that correct?
So if for example the purchase of land were not to proceed, then we would just pay. At the minute, we've got that money from the accountable body, which is so if it didn't proceed, we would pay the money back to Plymouth City Council, and then it would be up to Plymouth City Council as the accountable body to have that discussion with government.
I think we need to just be really, really clear what the risk is that we're talking about, and it's I won't go into the thought process, but it's not totally clear what the risk is, because if we have an asset and a liability, and then it maybe should go to Plymouth but doesn't go to Plymouth, we then get merged with some other council. It's at the end of the day, it's the local public that have both the asset and the liability.
If I may, Chair.
Yes.
In seeking to assist you, I think the concern is that the asset and the liability could conceivably end up in different authorities, so that we'd be left holding the liability, or there would be no we left, presumably, because if the Freeport's gone entirely to Plymouth, that means that Southampton's District Council no longer exists either, but that our successor authority would still hold the liability, but the asset would go to Plymouth. And I think that is a real concern. I mean, one would suggest that good governance would prevent that from happening, but that's not guaranteed.
Yeah, that is a helpful clarification. Thank you, Councillor Rake. Councillor Nix.
Yeah, I absolutely understand that, Councillor Wright. I mean, surely there will be, in local government reorganisation, there will be a passing of assets and the liability of those assets between the proposed authorities. I don't.
Yeah, I mean, I think maybe we, Councillor Rake can't answer that, can he?
No, I wasn't. I wasn't directing that, Councillor Rake. I was floating the idea. I wondered if.
I mean, I think
Powell could.
Yeah.
So, Chairman, local government reorganisations that have happened in other parts of the country, where an asset has been transferred and there is a borrowing associated with that asset, both amounts have gone to the successor authority. So I think it'd be highly unlikely that an asset would go to one authority and the liability would go to another. Generally, they would move to the same place. That's what's happened in other local government reorganisations.
Yeah, thanks. I mean, that being the case, is it worth us looking at? I mean, I take people's thoughts. Councillor Yardy.
Well, let's just move along the timeline a little bit. We've put out, I'm just using X million, and we get devolved, but we don't see any benefit. So we've taken £2 million of borrowing and we've spent it, but at that point we then get transferred somewhere else. We don't see any of the benefit. So our balance, our books are going to look £2 million worse off at that point in time, because the future benefit hasn't come in yet. So I'm just concerned a little bit about the timing of such flows and what that would do at that snapshot time to the health of our finances. That's my concern.
But that borrowing is over a long period, so it would be over like 22 years. The borrowing would be taken out over. So, the amount of money we'd be paying back on that borrowing is about £280,000 per annum. So that would be the level of risk that would sit with a successor authority or with us as South Hams. So it's over a long period anyway, and I don't think probably the earliest local government reorganisation could happen is 28, 29. So it would be a decision on that land would have been made prior to then, I think.
Well, I think given the different opinions and the question raised by Julian, I mean, maybe it's helpful if the working group just take a quick look at this and see if there are any extra risks. As Councillor Rake said, maybe the assets and liabilities being split would be a problem. Maybe the timeline of repayment could be a problem. I think if there are any new issues emerging from the Freeport and from the implication of local government reorganisation, and its impact on the Freeport funding, we should have a look at that. So let's roll that in if Councillor Nix is happy to the working group, and then maybe Lisa, we could just validate the feedback that you've given about assets and liabilities sticking together, and see if the paperwork says anything different. See if John's got a different view. See if we raise it with Plymouth, whether they can just validate that point and put our minds at rest. I think those are fair questions to ask. Yes, Councillor Oram.
Did you forget my name for a second there, Chairman? Thank you. Just on that topic, we are expecting to see some short-term plans at the end of the month. I think the leader knows the particular date when we find out a little bit more about the sort of the skeleton plan from all of the councils at the moment. So our Freeport working group meeting on the 27th might be a bit too soon to really digest any information that we get from there. So perhaps the meeting after would be a ideal time to discuss that topic in a bit more depth.
Yes, Councillor Orme, I agree with you. We've actually got, like I said, we've actually got some visitors coming in on the 27th of March anyway. And we want to get some information prior to any meeting on that anyway. So we'd probably log it in for the following meeting.
So, Julian, would that be helpful to you in terms of just checking your question on that?
I think that would be really helpful. And I mean, we may be worrying about something, and Lisa's tried to reassure us, but I think it'd be really useful to have that you can get that rubber stamp, because in the end, we are talking about lots of moving parts here.
Yeah.
We're talking about Plymouth, we're talking about Devon, we're talking about the district, we're talking about the Freeport, we're talking about the government. And it may be just one of those things that just slips through.
Yeah.
So I think if we can have that cast on our guarantee that the liability goes with the asset, then that would be very reassuring. And if the working group can do some of that groundwork, that'd be brilliant. Thank you.
Okay, thank you. Councillor Orme, is it on a new thing?
No, Chairman. Sorry, it was just could the leader just clarify if he knows what sort of dates we're looking at for when those initial plans are coming out, just so the committee.
Yeah, 21st of March is when the initial plans go forward, but of course those are only initial plans. Those are, and we're expecting 4 or 5 for Devon. So there's, we are a long way off from when it actually happens. 21st of March is the initial. You put in your ideas. We're expecting about 4 or 5 for Devon, and then in November the more detailed plans go in. We were asking government to say, when the plans go in, can you tell us which ones are non-runners? But they don't seem to be that keen on doing that, which is a shame. There's going to be a lot of time and effort spent on, solutions that aren't going to be followed up. And it would help if they just said, well, this is one or this is the other. But the whole time we're getting mixed messages. I just had something from the journal, the Municipal Journal, which is the sort of local government thing. They talked to Jim McMahon, the Minister for Local Government Reorganisation, and he's just said that they're running into capacity issues. Well, there's a surprise. And so they might actually leave the smaller unitaries alone as they are for the moment while they try and sort out the other issues. I mean, they've just they've set these hair running, and who knows. So, but those are the 21st of March, November, and then anyone's guess is good as mine.
Yeah, thanks, Julian. Okay, I'd like to just move then to the other points that Julian raised about the capital strategy. And it seems to me, Lisa, unless I'm missing it, that we do not have like a statement in the strategy that says there needs to be member or executive approval. I mean, maybe it's implicit there, I don't know, but...
it has to be full council approval, Chairman, before the end of March. So it would go forward to the full council meeting.
Sorry, maybe I could just maybe just clarify what I'm saying, is that this document goes to full council, but what it doesn't say, as far as I'm aware, is that a capital acquisition needs to be approved. So let's say we're spending 2 million on Woodland. What's the decision-making body for that 2 million? And should it not say in the capital strategy who makes the decision?
Chairman, I think it would say that in the constitution rather than the capital strategy. It's the constitution that would set out which a body can authorise borrowing, which body can authorise capital expenditure.
Drew, can you?
Well, no, that's the case here. So the financial procedure rules within the constitution set out which decision-making body, depending on the value that investment. But so under the £2 million for the purchase of woodland, you know, if that was over sort of £100,000, you would start, you know, there's different levels for the executive, for full council and so on. So that's where it's set out.
Okay, so I mean, we touched on this before. So Julian's concern about the sign-off or this approval not going to the right body. Well, no, I wouldn't. No, I wasn't going to say
there
this
is
place.
there is something in there, and I can't dig it out now. But it's always worried me that there is a scenario which goes through when it does not go through a particular committee, and it is decided. It's because they say that it needs to be done at pace, and therefore it would be signed off by, you know, executives are involved in the decision, but it just worries me that is a slippery slope, and that what we should be, you know, that too few people seem to be involved in a decision when we are talking about huge amounts of potential funding. Now, I'm not asking for a rewrite of it, because I understand that would be rather pointless at this stage of this council, but I do think that we should be aware of it, and if we could minute in this meeting, or the audit and governance, that it's an area where we would expect that to come to executive, because what it actually says is when that decision is taken, and the Dartmouth property was an exact example, is that was never reported as a decision being taken at executive, so scrutiny could never call it in for something to scrutinise that decision. It is reported that that decision has been taken, and that was it, and there was no opportunity to scrutinise it. And I think that is a weakness in governance. I understand the reason why it's there, but I don't think that the reason to move at pace should be an overriding reason as to why we should do it. And, you know, like I said, if you're a scammer, you know that the first thing you do is you tell people they've got to do it at pace.
Yeah.
Which always worries me.
So let's get to this quickly, members. I don't want any mucking around on this. We need to decide quickly. Do we have a view on this topic, or, you know, should we take a look at it? Well, just hold a minute. Let's see what members say. Should we have a look at this question? Should we have just set up a little group to look at the constitution? Because I take Julian's point that we may not exist in 2 years' time, but on the other hand, maybe we will. Who knows? And if there's a wrinkle there somewhere, Councillor Reid.
I think that at a very minimum, I'm just trying to cast my mind back to the exact composition, but when there was the consideration of a possible acquisition of a site in Ivybridge, a sort of a crash team was assembled very quickly to sort of and I think at a very minimum, given that the ostensible reason for not having a formal process in place is the need to move at pace, I think at the very minimum there should be some recognition of a sort of safety valve mechanism like that. It might not be an acceptable level of scrutiny, but at least it would be some. And I think that what happened with the Ivybridge site, I don't think interfered with the process at all, and gave comfort, hopefully, on both sides that this was something that wasn't completely loopy to try and move forward, or could have gone the other way. But I think it's an important thing. I think there are ways of dealing with it without slowing us down, and I think it's certainly worthy of consideration.
Thank you, Chairman. By all means, I think just to say that we're not going to be here in a couple of years' time isn't sort of here nor there, in my opinion, because there will be something to replace us, you know, at the end of the day. And if we take a look at this now and put new things into place that are better than what came before, then, you know, our constitution might be the exemplar of which a new administration looks at and copies and pastes into its own new constitution. I don't think we should pull the brakes on good governance just because we're not going to be here in a couple of years' time, because at the end of the day, as I said, there'll be something else to replace us. So maybe we should take a look at this in a bit more depth.
Then would you feel comfortable in?
Well, I mean, yeah, I mean, I take on board what Chris says there, and we should look at it. But I think Simon's suggestion is something to try and. I mean, we're almost formalising an informal meeting, but I do think that how we looked at that Ivy Bridge potential acquisition was a good example of the council working incredibly well and members having a lot of input in how it was said. You know, in what the final decision was. I mean, you know, all right, it wasn't a minuted or public meeting even, but it was discussed openly amongst all the elected councillors.
Drew, then, and Lisa.
Thank you, Chairman. With regards to, I think it's the regeneration and investment strategy that's being referred to. When the property, the investment property in Dartmouth was purchased, it went to an informal executive. So all 6 executive members received a briefing note, a paper, and they all had to either vote for or against the purchase of that property. So it did go through the 6 executive members. The strategy quite clearly sets out that if 3 or more members did not vote in favour, the purchase would not have gone ahead. So though it didn't come to the public meeting of the executive, it did go to all 6 executive members with a paper. There are audit papers obviously backing all of that up. If members wish to change that regeneration investment strategy, obviously it can be brought back. But what it does allow you to do is, if there is a property or a piece of land that the council wanted to purchase very quickly, for example, at an auction, for example, that strategy is there to enable that process to happen. But it does have to have the majority vote of members on the executive. So it cannot proceed with just an officer's decision. That's not how that strategy works. Just for background. Thank you.
I think that's good. I mean, but what I accept that, and no one's saying there was something particularly wrong at the time, but I think we're debating whether the policy maybe is sufficiently transparent or clear or obvious to maybe the opposition leader or whoever it may be. And that's important. You know, our job is audit and governance to advise and give feedback. And what I'm hearing is there's a question over the clarity, the transparency of governance in this case. It doesn't mean that we've decided to change it. I think what we're looking at is deciding to look at it. So what I'm proposing then, I think, is that we set up a little group to have one meeting to look at what the existing policy says around something like this, and to report back to audit and governance on that, and whether it's fit for purpose or needs reconsideration based on the request of the leader. Would anyone second that suggestion? Councillor Oram? Okay. Any other comments or debate before we put it to a vote? So basically a one meeting task and finish to look at the current policy on capital acquisition, or as Lisa said, whatever it's called.
Thank you, Chairman. It's the regeneration investment strategy.
Yeah, okay. To see if it's fit for purpose, clear and transparent, and you know, obvious for members. Any in favour? Okay, no need for calling again. So what we'll do then maybe is just drop a note and see who wants to be part of that after the meeting, shall we? In the interest of time. But Julian, thank you for your suggestions.
I've got to whiz off to the
as do we all.
I'll send your apologies.
Send our apologies. So let's move forward quickly. Thank you, Julian. Let's move forward quickly then, because we still got a bit to do. So, you know, just keep them talking until we get there, Julian. Yeah. That the Audit and Governance has scrutinised and recommends to Council the approval of Capital Treasury Management Investment Strategy with changes to be authorised by Lisa and Julian. Would that be okay? In favour? Oh, a proposer. I'm proposing. Councillor Nix is seconding. And Yep, in favour. I think they're all agreed. Thank you. Thank you very much, Lisa, for that, and appreciate all the detailed work you've put into it. But it is important that we spend a little bit of time looking at it. So let's move forward then to the strategic risk register. We seem to have lost Neil. Item 9. Councillor Brazil will introduce his leaving, and Neil Hall will go through the report. He's gone as well. We better.
I can pick that up, Chair, if that helps.
Just to say. Right, let's move on quickly. Drew.
Thanks, Chair. Yeah, I mean, hopefully this report is pretty self-explanatory. It's the same format as you've received before. The key note really is that there's an additional risk that's been included, which is relating to local government reorganisation, which obviously has been mentioned a number of times during the meeting to date already. So, you know, in the interest of moving the meeting forward, that's my introduction for you, Chair.
Excellent. Well, perfect and succinct. Okay, thank you very much. Well, does anyone want to raise any questions on this? I mean, most of the risks we've already seen, but as you say, there is one new one. And we've seen the report before in its format. There are some changes, so some risks are going up. Any questions or comments on this from any members?
Can't remember my name either. I don't
No.
know. It's great to see the scoring, etc. Thank you. It's much easier to see in this format, so that's really good. And I'm pleased to see the new risk on there as well, because it's really important that we have transparency with all this going on with the LGR. So that's brilliant. I'm a little bit concerned to see, and again, I'm back to my IT and cybersecurity, that it's still quite high. And I just wondered, really, if there's an explanation as to why we're struggling to bring this down.
Yeah, certainly. I think it's because the likelihood is really hard to control. We are putting in as many measures as we can in terms of mitigation. We've invested in additional software defence. We've got training packages. We're going through the CAF, which is the cyber assessment. And I think we're in a really good place. But the likelihood is, and the intelligence that's coming from government, is that these attacks are increasing. They're becoming more and more advanced. So to reduce that down would probably be the wrong response. So I think it's right that it sits high on the agenda for members to be aware, but also, which it means that then officers are spending time and money on trying to protect the organisation as well as we can. So I think, unfortunately, it's just that's the position we're in.
Yeah, Councillor Dennis.
Thank you. So I think it would be right to point out that obviously that still remains on our risk framework there. But obviously, you know, in mind that we're reviewing sort of the budget book again, we have obviously removed £75,000 from a line that says business continuity and cyber security. So just some reassurance that those two things tie in together.
Okay, yeah. So we've still got money within the IT budget, and we invested a fair bit last year on the new SOC, I think it was called. I'm not going to pretend I know what the acronym is. So we believe we've allocated the right amount of money to the right level of technology at this point, and we obviously have the IT budget, which includes the security element. In terms of the business continuity, and the two are obviously linked, we are investing a lot of time at the moment into the wider approach to business continuity to look at the impacts of cyber attacks or other issues that would affect the continuity of the business.
You okay with that, Councillor? Yeah, thank you, Joe.
Yeah, I just noticed the typo actually, which is a rolling programme of staff and members. So I think that presumably that should say training.
I spotted that one earlier on. I hope no one else would.
Councillor Rigg.
No, sorry, I'm just holding my glasses up so that I can actually read the screen. I'm not making it.
Right. Okay.
I'll put them down here. Yeah.
Christ, we really are a right bunch.
Right. Yeah, I'd like to ask just a tiny bit more, if we can, on the new local government reorganisation risk. I mean, clearly it's there, but I guess what I'm keen to know is what, other than to monitor what's happening, which is important, are we starting to look at our readiness for merging any services, for sharing any resources, for looking at contingency planning, looking at resource implications of some kind of new direction, so that we keep existing services running as well as we possibly can?
Yeah, we certainly are, Chair. I mean, the 21st of March deadline of getting the first submission in is what we're focusing on at the moment. So myself and Andy Bates have been pulling together that submission, which I think Andy outlined in an informal session after the last full council meeting. That will come back to full council on the 20th of March for approval. That document will have been shared with the other authorities across Devon. So with the 145 proposal, which members are aware of, which is Plymouth, the cluster of Teambridge, South Hams, West Devon and Torbay, and the other 5 authorities. So the first version of that has been circulated today, actually, to the wider group, so that we get hopefully a coherent, collected document that will be sent off to government covering that 145 bid. As the leader said earlier on, there will be other bids going in from different clusters and different organisations. So that's the focus at the moment. For some of that, we've had to pull together financial information about the viability of the proposal. It is only at this stage really an expression of interest and evidence that there is collaboration and conversations going on among the different authorities. Alongside that, we've got a working group who are starting to look at the programme we would need to put together for transition. Obviously, we don't know what that transition will involve, but there are some elements we can start to prepare. So understanding of our staffing profile, looking at the financial implications of different combinations of council tax, business rates and so on. So, and we're looking at, I've got them here, programmes that have been delivered for other unitary changes. So at the moment, it's collation of all the information, all the evidence, looking at where the transition has been successful and where it hasn't been successful, and we will learn from those processes. So yeah, we're doing all we can at the moment, but clearly we need a little bit of a steer as to what the final proposal will be.
Yeah, thank you. That's a very helpful answer for me, Councillor Rigg.
Sorry, just to throw into the mix, I mean, everything you've just outlined is laudable, and but it also, if you'll forgive me, sounded slightly institutional. And I think one thing that we should, this has very much been a top-down process. It's been imposed on us by central government. Devon then the county then tried to impose their version of it on the rest of us. And I think that the only way we're ever going to stop this being an entirely top-down, done-to-us sort of thing is by engaging with, at the grainiest possible level, our residents and their representatives. So I just sort of add that into the mix as a leavening of the institutional.
Absolutely. As we've set out, 21st of March is basically we're talking to each other. Has this got legs? Is it going to work? Is it something that does it fit within the criteria the government have laid out? And then between now and November the 25th or 28th, we will have to produce a detailed business plan. And part of that will clearly be full-scale consultation to ensure that the community are in support of the proposal going forward. So absolutely, yeah.
There we go. Just more from an interest point of view, really. Are we looking at or reaching out to Somerset Council, as they are the most recent example of unitarisation in recent years? and the kind of issues that they had coming together as a unitary council. Have we looked at them as a case study for what we're about to do?
We haven't as yet, but we will. I think at the moment it is all about the speed of which we've got to put forward a proposal. We've got all of their plans, all of their transitions. We've got their structures, and the same as we've got Dorset's and Bournemouth's, and we've looked wide, across the piece, and it's trying to feed that information into at the moment, the leaders and the chief execs who are having those conversations to come up with something that they're prepared to all agree. So, we're still at that stage at the moment, and then we will be going and sort of taking on the learning from the recent organisations and looking for best practice.
Sorry, just because Lisa mentioned it earlier and it's been touched on, I can think of, not that I follow this particularly closely as I'm about to reveal, but I can think of several instances where things have merged. I can think of few. Could you, just in terms of preparing as members, doing our homework, places where the reorganisation has been a split, so that we can have a look at those and learn about that?
So obviously one of the closest to us, Terry, would have been Cornwall. So Cornwall used to be district authorities and a county, and obviously is now one council. We are going to be speaking, or I'm certainly going to be speaking to my opposite number in Cornwall about what experience they had, just as Councillor Oram suggested that we try and learn from their experience.
That was a merger, so that all
that was districts coming together.
There's no bit that used to be in Cornwall that now no longer is my point.
Yes, that's right. Yeah.
Yeah, I don't understand what you're saying. So probably the most closest one is Dorset. So Dorset split into Dorset and Bournemouth, Christchurch and Poole, where previously that was one county. So that was a proposal to split, which is similar to the proposal that's been put forward at the moment by South Hams. So that's an example. I've got some others I can share. Members.
I'll be in Dorset this weekend, so I'll have a look around.
Have a look, see how it's working.
Okay, thank you. I mean, it will be important. Well, sounds like we're going to discuss it again at the full council meeting in a couple of weeks' time, so that is useful. Any other points, or should we go to the recommendation? Let's go to the recommendation. So we are considering the updated strategic risk register. We're not approving it. I'm not noting it. All those in favour? Oh, I'm proposing the recommendation. Any seconders? Oh, Councillor Nix. All those in favour? We are unanimous. Good. All right, thank you. Let's move on then, thank you, so that we get to our next meeting if we want to. The budget book. Right, we again have two people not here. So I'm going to ask Lisa to take us through the budget book. And we have a lot of detail in this, but we have also looked at the overall budget in the full council meeting. So this, as I understand, goes into the granular detail, and maybe you could point out if there's anything we need to be looking at particularly or need to be considering as we go. Thank you.
Thank you, Chairman. Yes, that's as the Chairman has said, the revenue budget for next year has already been approved by members at Council. That was on the 13th of February. So purely what we have done here, this is just the presentation of what the budget book would look like for 25-26. So you can see there on the left-hand side the current base budget, any environments, and then moving forward, we've got columns showing NTFS adjustments. So those are things like cost pressures that were approved by members as part of next year's budget, or additional income and savings. And then we've got the final base budget there on the right-hand side. So all of the budgets, all of the service budgets would be assigned to a budget manager, and then they are within the 4 directorates set out of customer service and delivery, place and enterprise, strategy and governance, and strategic finance. So I did, following feedback from this report being reported to the Audit Committee last year. This year I did attach the appendices from the budget report in appendices B and C, which show the things like the cost pressures and the income and the savings, so you can then see where the changes have come from. Thank you.
Thank you, Lisa. Okay, are there any points on this? Yes, Councillor Dennis.
Sorry, I appreciate we have looked at these things over and over again, but I just wondered if I could ask a couple of questions.
Of course.
I'm not expecting us to necessarily know the answer at this point, but the extended producer responsibility government grant is obviously to the tune of £1 million, and I just wondered what we have to do to deserve that, basically, to get that. Thank you.
So that extended producer responsibility, that was all about meeting the requirements of the Environment Act. I think it was the Environment Act 2021 from memory, but the council already did that. So basically, that's when we moved to the Devon Line service and the weekly food collection. So because we'd already done it, really we should have had funding in previous years for that, but nationally next year is the first year that all councils have had funding for that. So yeah, we do think that as we move forward, that £1 million will probably start to reduce, because the whole idea of that is that the amount of material would start to decrease over time. Yeah, thank you.
Thank you. So second question is the reduction in income from external contracts. That's obviously a reduction of 320,000. Is that one particular contract? So we might not be able to talk about it in open discussion.
If we wanted to go into detail around that, Chairman, we probably need to move into part 2, if that is okay.
Do you need the detail, or could it be sent? Could it be sent by email, perhaps? Can we do that rather than?
Yeah, yes, certainly. Yeah.
Would that be helpful, Councillor Dennis? Okay, let's do it like that rather than split the meeting and then going into a specific contract. We've got a note of that.
Email to all.
Yes, email to all members, confidential email to all members. Yeah. Yep.
And just one more. The South Devon AONB partnership, obviously national landscape now. The £20,000, which then doesn't appear in the next 3 years. I'm just really confused about that, to be honest, because I've looked back at the minutes from the executive report on the 30th of November, and I read it as they had an assurance that they would get that funding for the next 5 years in that meeting. So I'm just wondering where, Appendix B, page 183. So why is that now 0?
May have to take that question away, Chairman. I'm afraid I don't know the answer to that one, unless either of my colleagues do from the finance team, or Drew.
I think this is a page of changes. So as I understand this page in Appendix B, what this is showing is a change in each year from the previous year. So there's a base of 20,000. The zeros are suggesting no change. It's on page 183. And maybe I've misunderstood, but that's, yeah, it's a change in budget.
Oh, sorry, I can see where the 20,000 is now. That isn't next year's budget. That's the current base budget. So that's an increase to their budget of 20,000. The 0 that's shown in 25-26 is saying there's no change to that budget. Yeah. So sorry, the columns in yellow show what's changed to the base budget. So it's not that they're not getting a contribution. The executive report on the 30th of November would have increased their contribution by 20,000, and then we haven't changed that for 25-26. Thank you.
That helpful, that explanation.
Yes, thank you.
Any more for this one? There's a lot of figures in here, but we have seen them before, or not this level of detail, but the high level. So should we move to the recommendation that we note the content of the budget book? Again, we're not necessarily endorsing this, so I'm happy to propose that. Any seconder? Councillor Oram. Okay. All those in favour? Good. Thank you very much, Lisa. Thank you very much, Lisa, and the person who did all the detail work for this. Very much appreciated. Okay, let's go to the next item. Shared services methodology. Well, we don't have the two people again. This is a recurring theme, but we do have Lisa, who seems to be able to.
Mrs. Henstock is on the
call.
call.
I'm so sorry. Pauline, you are there.
I don't know if Mrs. Henstock
Oh,
wants to take this one.
fantastic.
Thank you.
Thank you for your patience.
No problem at all, Chair.
Over to you to explain what we should look at in the shared services methodology, which I think is very, very similar to what we saw last year.
Thank you, Chair. Yes, so this is our annual report that we bring to Audit Committee every year, where we review our shared services apportionments for the year to inform close down, but also our budgets for 25-26. What we do is we go through and look at all the cost drivers for every service to see if they have changed from when we did the budget for 24-25. If they've changed by more than 3%, we would change the splits and there would be a financial implication to that. If it's less than 3%, we have a tolerance level. So if it's moved by 1%, then we would not amend it for that. We've got a tolerance of 3% and below. So for 24-25, you'll see in the report that there is a small reduction for South Hams of £58,600, and that mainly relates to the planning service. So we look at the number of planning applications, the number of enforcement cases dealt with by South Hams and West Devon, and share the salary costs accordingly to ensure there is no cross-subsidisation. This is a really important report that we do every year to review the shared services splits to make sure they are still appropriate. I hope that helps, Chair.
Yeah, thank you very much. Seems quite clear and straightforward. Councillor Rake.
Thank you, Chair. Sort of on the face of it, the splits look very fair. I mean, I'm just looking at the number of planning applications where the split is 71 South Hams, 29 West Devon, and indeed the number of planning applications is almost spot on, 71%. But there's no reflection in here of economies of scale or of threshold. And that, I mean, might just be a philosophical thing, but imagine there was a planning AI system that would produce big savings, but was only, or big savings, but was only really worth it if you did more than 2,000 applications. Combined, we would be able to use that system because we've got 2,000 applications plus for South Hams and less than 1,000 for West Devon. Alone, we'd be able to make those savings, but alone West Devon wouldn't. But we don't get any recognition of that in the way that it split. I mean, or we wouldn't. And so where there are economies of scale, they go unrecognised. Is that? I mean, I'm not saying that's a good thing or a bad thing, but that is a thing, isn't it?
Yes, Pauline.
Yes, Councillor Rake, it is based on those cost drivers that are approved as the apportionment of the salary costs. So economies of scale wouldn't come into it necessarily, and then unless that did impact on the cost driver, and then we would use that information. But no, you're quite right, they're not specifically included.
But it's good that we take account of the philosophy of it in this committee, isn't it? I mean, I don't know if you think we should change the name of the committee, but I mean, I'm interested in the question nevertheless. But
I just think, I mean, it's very easy to look at these and think, oh yes, that's fair. South Hams had 71% of the planning applications, so we should pay 71% of the money. But I think, you know, that might not be fair. is all I'm saying.
Okay, well, I think what maybe the team should bear in mind is just checking in future, how are we doing it on the base of reality rather than just theory. That seems a fair conclusion. But what about the cases then, Pauline, where there's NA, in other words, like if I take licensing just as an example, 50-50 split on the basis of policy work, but there is no data, and surely there's a lot more licensing requests in South Hams, I would have thought. I mean, how are we just guessing that, or is that reasonable? Maybe Councillor Rake knows more about licensing than I do, but he chairs a licensing committee. But I mean, is it a reasonable, how we, you know, are we doing it fairly where there's no base information is my question.
We do talk to the heads of service, Chair, to find out what the best cost driver is of the time spent by the service. So if they feel it is more, say, policy work, then it would be split on a 50-50 basis. If they thought it was definitely driven by a number of cases, then we would take that into account as much as we possibly could. So it really is down to the heads of service and how they feel their team's time is spent and how that cost is driven.
If it helps, Chair, I mean, I think there is a lot of policy work in licensing, and it is actually a big advert for the shared services model, because we can develop essentially a single policy for both authorities, and just cut and paste the names, and make any tweaks that members of because of limited leeway in licensing policy, you know, tweaks that individual members may request, but otherwise the bulk of the work is done only once and you get twice the benefit. So it's...
Okay, thank you. Thanks for that, Councillor Yardy.
Hi, yes. I was just thinking about leisure centres, and it's done basically by, this allocation is by a number of leisure centres. I was just exploring that a little bit, because it could be that we consider how many FTEs are used in each region. It could be that we look at because these pools are, some of them are not just pools, they are squash courts, there's all sorts of facilities are added to it. So what I'm trying to get to is, and I'm particularly thinking about Dartmouth, it's going to be, Dartmouth I believe is small. Dartmouth I believe is counted as one at the moment and has the biggest losses attached to it. Is that fair? And so therefore, is there another allocation key that should be suggested? And I'm just off the top of my head thinking FTEs might be the best way to fairly proportion the loss making, frankly, that takes place around that, around the pools that are attributed to South Hams versus those that are attributed to counterpart in West Devon.
So thank you for that question, Councillor Yardy. With regards to leisure, we have one leisure officer, so really this cost driver is splitting that leisure officer's time.
Sorry, I thought it was a contract that we were splitting.
Yeah, no, sorry, it's only
okay. In that case,
the
I'd
member
take it all
of staff.
back.
Yeah, so it's one leisure officer and a little bit of facilities time.
I just take it all back.
Thank
you. I got it wrong.
Yeah, thanks, Lisa. That is helpful. We're talking about one person. That's clear. Okay. Any other questions on this? Yes, Councillor Rake.
Once this has all been through the wash, I mean, are the allocated costs, do they represent a similar proportion of, for instance, total council tax income, or for the two authorities? So once all the costs have been allocated under the shared services model, added up, if you compare that to the two districts' council tax precepts, do they represent a similar proportion?
No, they wouldn't. West Devon's council taxes, Bandy council tax is higher than South Hams, whereas the share of staffing costs that South Hams would have from the shared services model, because we are a bigger council, would be higher than West Devon. So they're not related in that way. So there isn't a correlation between the two, but I don't think there
Sorry,
would be
I don't think we need to introduce Band D for once. In terms of the total aggregate council tax revenue for each authority compared to the costs.
That would be comparable, yes. Yeah, right. A Band D isn't, but in terms of council tax income, that in totality, yes, it would be comparable.
Okay, all right, no more by the looks of it. Let's go to the recommendation that the Audit and Governance Committee notes the methodology and apportionment of costs for 2024-25 as attached. So we're just noting it. I can propose that. And any seconder? Oh, yes, Councillor Dennis. All those in favour? Thank you very much, and thank you very much, Pauline, for staying on the line all this time to explain all that. Brilliant. Okay, thank you. I think I'm getting a tiny bit confused with the numbers by the time we get to 13. Oh, right, okay, because the numbers aren't the same as the numbers on my sheet or the same as the numbers in the agenda. We now go to 13, the committee-sponsored task and finish group working group update. So over to Councillor Nix for Freeport.
Thank you, Chair. We last met on the 30th of January, where we were discussing the displacement test and how that would work. We had a long discussion, and the general feeling is the test needed testing, but the procedure was thorough, and that was explained to us, and all of our silly but not so silly questions. Chris Brooks updated us on the land position at Sherford, which obviously we discussed again today, and other discussions took place about third-party scrutiny and how that would work going forward, on the particularly on the displacement test. Good news, going forward, there are over 200 businesses which have shown an interest in taking up residents, thank you for that, residents on the site. Some will have all total Freeport benefits, but some have only got just some eligible benefits. We have, the next meeting is about net zero and how that is going to work with the Freeport. We've got Polly Cooper attending, who is the net zero lead for Plymouth and the local area, and Ian Frost as well from the Freeport board, and that will be on the 27th of March. We still have skills and training and financial resilience to discuss, and obviously the Audit Committee have just added another topic today, so we will be adding that to the list as well.
Yeah, thanks very much, Councillor Leeks. It seems to me that you're doing a very thorough job in looking at some of the detail of this, and that's very positive, because I think we can be reassured where you have looked at it that you've asked some pertinent questions and got to the bottom of the issue. So that is great to hear. So just related to that, could I ask how you've decided what to look at, or how many of the 17 topics have you already done, or what's sort of outstanding are you? That would be interesting to hear. So
we didn't look at all 17. In the first meeting, we looked at the ones that we thought were most important. So off the top of my head, I can't remember which ones we've already discussed.
Okay. Never mind.
But obviously, we've still got environmental impact, net zero to cover, financial resilience, skills and training, and obviously the funding aspect that we've discussed today. So that's 4. I would surmise that we will then return to the 17 and see if anything has come up since then, which make us want to revisit either the ones that we haven't done or the ones that we have done but have moved on since then. I don't know if Councillor Yardy or Councillor Oram, who are both on the group, want to comment on that.
I think we've just highlighted the ones that were highest priority. and focused on those rather than trying to spread ourselves over 17. So we did a prioritisation within the group.
Yeah, Chairman, I was just trying to flick through the diary a bit quick to remind myself on the topics, but the most recent one was obviously infrastructure, which was quite important with Devon obviously taking the lead on highways and whatnot, which was a very thorough and informative session. And then obviously displacement, which was the most recent one, which was quite eye-opening and quite reassuring, that there are policies, procedures in place to make sure that displacement isn't going to be an issue moving forward. And then, of course, we've got our next one, as we've already discussed, which will be on net zero. I think the committee will be very interested to see the outcomes of that. But it is a very flexible, fluid working group. So as topics arise and as members bring their concerns forward, we'll certainly readjust and reassess as we move along. In particular, with this issue of the local government restructure, I think is quite prudent. So I will also look forward to that session. And of course, it is an open session, so members that are not coming to those sessions already are, of course, welcome to come to any that they feel is particularly interesting to the residents or to their portfolios.
Well, we won't minute that.
Notice he didn't put his microphone on for that.
No, he didn't. He didn't. Nobody heard. Nobody heard. Right. Okay. Thank you very much. Any other questions on this? Seems very good to me. So we look forward to feedback next time round as well. Okay. So we don't have any recommendation. That's a shock.
No, just note.
We move to the number 14 then, with no further discussion. Right, item 14. Item 14, the work plan. So the work plan for the remainder of the year and sometime in the first part of next financial year. So we don't need to go into all of this in detail, but just my feeling, as I mentioned, Lisa, at the prep meeting, is that there's really a lot to do in the next meeting in July, and these items are also quite heavy. So the draft statement of accounts, the governance statement, the internal audit report, the annual report, the charter and strategy, and the self-assessment, which may take us some time, annual treasury management, fraud risk assessment and fraud report, etc., etc. So I'm wondering, have we got some thoughts about splitting this into 2 half days? Councillor Oram, what are your thoughts?
Chairman, I recall last time we met, you wanted to take a closer look at pensions as well as a separate meeting. It is on there, is it? I need new glasses, evidently. But yes, what you've said, I think, is absolutely true. There's a lot of very meaty stuff on this, and either we need a good long session, a bit of a marathon session to get all this work done in one, or we need to consider splitting it into 2.
Okay, so I don't know, Lisa, whether we could consider 2 half days, morning and afternoon with a nice long break and a good lunch in the middle to refresh us. Or what? Yeah. But if that's feasible in the timeline, that would be better than trying to do it all, starting at 9 o'clock and finishing up past 12. We're going to be struggling, aren't we? And then do we want to do the pensions in the same meeting, the same day? Or do we want to have a separate meeting for pensions?
I'm just noting that by the time we get to July the 25th, people are disappearing for summer vacations. So if we're going to split this meeting, we've got to put them into 2 meetings in basically the first half, roughly, of July. At the moment, we haven't got a date at all.
So the date would go to the 20th of March council meeting. So that's why we haven't got a date at the moment, because those dates will get agreed by members at the full council meeting on the 20th of March. As soon as we've then got that date, I can then contact Devon County Council to see if they're free to attend for a talk on the Devon Pension Fund. But it's a bit like a chicken and egg. Until I've got a date, I can't approach the pension fund to see if they can come and give a presentation to the committee. So we would look to try and have a morning meeting and an afternoon meeting. So to try and split it into a morning and an afternoon, that would be the intention.
Yeah, thank you, Councillor.
But I mean, that would be on the same day. We're not proposing put it on like a morning one week and an afternoon the next. So hopefully that would all fit in.
Yeah. But if we have to have the pension on a different day, I don't think that's a terribly bad thing, because we need some brain power left at the end of the day, don't we?
But that wouldn't be till October then.
No, I'm suggesting not to have it in not to have it in October either. To have a separate session, if we have to, for pensions. If we can put it into the meeting in July, then that's reasonable. Yeah, Councillor Oram.
Yeah, I think you're right, Chairman. It is reasonable, and the pensions is, as I understand it, more of a briefing rather than a piece of work that we need to scrutinise and look at. So maybe that would be more prudent to have one that members could also attend virtually if we are getting a little bit close to the summer months, to try and break up that workload a little bit. I don't know if that's feasible.
Well, I was going to suggest that we could add pensions provisionally to the afternoon session, but I wasn't really thinking that fully through, because of course someone would need to be here to present that, and having them come along on the off chance that we might get round to them seems a bit unfair. So I won't suggest that. I do think this does look like two full sessions already, so I think a separate pensions session.
Is there any way we can prioritise which ones do we need to approve, which ones are we being consulted on, and which ones are we just needing to be informed on? I would tend to put the informed ones at the end of a session and make sure that we've got the necessary approvals at the beginning of any session, so that perhaps the information ones we can deal with offline if necessary. But that's an awful lot to get through. It'd be nice to prioritise them in terms of what actually must be approved.
Yeah, I think, well, perhaps I quite like the suggestion. Perhaps we'll leave that for Lisa to think about if it's feasible. But I'm thinking that we have, meetings starting at 10 to 12 and then a break, and then do the rest after lunch and include the pensions at the end. If we can do it like that, that will be a model. Otherwise, we're just going to be quite challenged. But I mean, we'll leave that to you, Lisa, to look at the dates and propose something if we can.
Yes, thank you, Chairman. I mean, the key item on that agenda is the draft statement of accounts and the draft annual governance statement. That is going to be, that's a good hour on its own, that agenda item. I mean, with regards to a presentation from the Devon Pension Fund, that doesn't have to be part of a formal committee agenda. If you wanted, just like the Treasury Management training, we could do that as an informal session if members would prefer that, or it can be part of the formal committee. In the past, when we've done it as part of the formal committee, but it doesn't have to be done like that. It could be informal.
Yeah, I mean, my feeling, and others may disagree, is that we did have a number of concerns about the pension fund, or a number of points we didn't understand, and it is a big chunk of our balance sheet. I think 25 million or some ridiculous 50 million at one stage, going up and down quite a lot. So I tend to think it should be part of this meeting so that we can have a proper face-to-face discussion. But others, it's not essential, but I think that would be ideal from my point of view. Yeah. Okay, then we're done, unless we want to quickly look at the next pages. Amelia, please. I mean, they're not actually quite so onerous, I think, at the moment. But, things may change. Councillor Dennis.
Sorry, this is sort of any other business, really. I just wanted to update on the... so obviously we looked at, with the Devon Assurance Partnerships report, the outside partnerships, and I questioned whether it was going to senior leadership team and when we would get an update. And in the break that we had, Neil informed me that according to the Constitution, actually that framework, that framework needs to go to the executive for approval, not just senior leadership. So just wanted to
Yeah,
correct
thank you. That is helpful. Yeah, yeah, that is makes a bit more sense. That is useful to know. Okay, any other points on this? No, then we shall finish and we have a chance to go to the next meeting if we so have any energy left. So thank you very much, everybody. Thank you, Lisa. Appreciate that. Thank you, Pauline, and the whole team in the back office preparing everything.